Welcome back to my channel. So now that you've set up your business, you've started making some sales, you have a proper accounting system to help you record those sales and send invoices to your clients, you're probably wondering, what can I expense? So in this video, we're going to cover, a wide range of expenses, generic ones that apply to most businesses. CRA's definition of a business expense is an expense you incur solely to earn business income. So anything related to your business that you need to do to earn money can be written off. This opens up a door to a whole range of interpretation. So I'm going to go over the generic expenses so you have a better understanding of what can be expensed. Before we do that, let's talk about documentation. So this is super important. If you don't have documentation and you are audited or you are reviewed, whatever expenses you don't have receipts for, CRA will disallow those expenses, reassess your tax return, and then send you a bill for the difference in taxes and also add interest and penalties. So very important, you have documentation. And what's documentation? That would just be your receipts. So on the receipt, it should have the date, the amount paid, the name of the vendor, and how the payment was made. So make sure you have all of those on your receipt. Now, most receipts will have this, but sometimes you go to a small vendor and they might be lazy or they haven't included it. So make it a habit to quickly scan your receipt to make sure you have all these points to have proper documentation. Next is storage. So you don't actually have to keep physical copies. You can just take a picture, or you can create a new album or a Dropbox, whatever you like. PDF copies are totally fine now. So let's get to the part you've all been waiting for. What can we expense in a business? So let's start off with advertising. The obvious ones are, running ads, Facebook ads, contracts with digital marketers, websites, things like that. Other ones that are not so common would be sending gift cards to clients, gifts to clients. Possibly could be argued that, you're promoting your business. Those are also advertising expenses. Anything stationery related, branded stationery, branded clothes can also be argued to be advertising expenses as well. Everyone's favorite expense, meals and entertainment. There's something about, going out for a meal and having that as a business expense. Here's 5 things that you need. First is the name of the restaurant, which is on the receipt, the price that you paid, which is on the receipt, the date, which is on the receipt, who you met with, which is not on the receipt, and then the business purpose that was discussed during the meal, which is not on the receipt. So pro tip here, take that receipt, flip it over, write down who you met with and what the business purpose was, take a picture, both sides, front and back. You can throw away the receipt and keep that PDF copy in case of an audit or a review. Next is bank charges. So the cost incurred to keep your bank account, your checking account, the monthly fees, the $5, $10, depending on which bank you're with. Also the e-transfer fees that you pay for sending e-transfers or bank draft fees for paying bank drafts. Those are all eligible expenses. If you have a retail location and you needed to get a business license from your municipality, that is also a business fee or a business expense there. Subscription, so monthly subscriptions like your Xero account, hopefully for your accounting, and then anything like MailChimp or a Dropbox subscription, things like that. Those are all eligible business expenses as well. Cost of goods sold. So let's say you are an Amazon seller and you're selling umbrellas on Amazon and you purchase 5,000 umbrellas to sell on Amazon. When you purchase the 5,000 umbrellas, that is not an expense right away. Those get recorded as inventory. Now, each time you sell one umbrella, that gets recorded as a cost of goods sold. So you're matching the income to the expense, because you're not selling the whole 5,000 in one go. You're selling them, one by one or more than that. But for that period, you would record how many you sold as your expense. Office expenses. So a bunch of things get lumped into here. So like office paper, stationery, pens, pencils, little things you would need to keep and maintain your office running. Of course, delivery and freight. So if you're mailing packages, Canada Post, UPS, FedEx, whatever, and the duties related to it, if there's some taxes you need to pay for bringing things in, those are all eligible expenses under freight and delivery. Next up, supplies. So if you're a cleaning company, you might have cleaning supplies. If you're a daycare, you'll have specific supplies, to keep the daycare running. I don't know, maybe diapers or toys and things like that, those would be supplies for a daycare. Subcontractors. Let's say you are an electrician, you took on a big contract, you're a small team, you're not able to do the whole project yourself. So you hired some external help, you offloaded a part of it. You can claim, whatever you're paying another electrical company, whatever you're paying them is an eligible expense for you. I do want to make a note here that CRA has certain rules between an employee relationship and a subcontractor relationship, so you do need to be careful. I'm not going to go into too much depth here because that's going to take up a lot of time. I will make another video on this. Just know that if they're subcontractors, they should be bringing their own tools, they should be in charge of their own time, and there is a chance of them losing money on this project. And you're not in control of what they do and when they do and how they do it. Just to summarize. Professional fees. So if you're paying a lawyer to set up your business, you're paying a lawyer to keep your business, file your annual reports, things like that, or an accountant to help you with your bookkeeping, your corporate tax, those are all write-offs. So even more reason for you to hire an accountant because you are going to get that write-off. Next up is rent. If you have a physical location or you have an office like this, the rent that you pay to your landlord is, of course, a write-off. Anything else related to that rent, if you're paying utilities or property tax, those are also an eligible expense. If you also have an office in your home, you can claim some of your home costs related to that portion of the office of your home. So how this works is, let's say you have a total home or a condo of 1,000 square feet, and then you have 100 square feet designated room with 4 walls and a door as your office and home. That would give you a ratio of 100 over 1,000. So that gives you 10%. So now you would be able to claim 10% of your total housing cost. So if you rent, that would just be 10% of the total rent you paid in the year. And if you own, that would be 10% of your mortgage interest, your strata fees, your property tax, your utilities, anything else related to keeping your home maintained. Now this is huge, right? Because everybody incurs these costs, but as business owners, you get to claim a portion of them. Salaries and benefits. So if your business is growing, you decided to take on a new member, a new employee, of course, their wages are a write-off. The benefits you pay them for their health insurance, all that good stuff is also an eligible expense. But if this is your first time hiring a new staff, I would just want to make a point that you do take the time to set up a proper payroll system, because you need to deduct their CPP, their EI, their income tax off of every paycheck, and you need to remit that to the government every month. There's a 20% penalty for not doing this every single month. So that can add up very fast. Always best to see an accountant and set up a proper payroll system from the beginning. Another super popular expense is obviously your car, right? Everyone wants to write off their car. Everyone has a car. Benefit to being a business owner is you get to write off, your car expenses. So there's 2 types of car expenses. So one is the cost of your car. So if you're a business owner and you buy something called a passenger vehicle, so this would be like a Honda Civic or a Toyota Prius, passenger vehicle, 5 seats, small car. If you purchase it through your business, you can claim this year in 2023 to $36,000 of its value before sales tax. If you decide to lease, you get a maximum lease deduction of $950 before sales tax. Now you can go over, but that's the maximum you're allowed to claim against your net income. Now, if you already owned a car, depending on its value, it might be beneficial for you to transfer that ownership into your business. But that's something I would speak with an accountant before to make sure that, the juice is worth the squeeze. The second type of expenses, which we all have, would be your operating expenses for your cars. So this would be your fuel, your insurance, your maintenance and repairs. So even if you don't own the car in your business name, you can still claim these if the car is owned in your personal name. If you only have one car and you use it for business and you use it for personal things, you're gonna need to keep something called a motor vehicle log. So what this is, you need to track your business kilometer usage for the year. So every time you travel for a business in your car, record the kilometers. There's great apps for this. I think there's MileIQ, there's Stride. They're all free. Every time you jump in the car, you just click it and it starts tracking your business kilometers. The next thing you need to do is check your odometer reading at the beginning of the year and check your odometer reading at the end of the year. So let's say, your MileIQ at the end of the year says you drove 5,000 kilometers for business use, and your odometer said 10,000 kilometers beginning, 20,000 kilometers ending. So you drove a total of 10,000 kilometers in the year, and your business driving was 5,000. So that gives you a ratio of 5,000 over 10,000, which is 50%. You'll be able to claim 50% of your car's operating expenses. Again, that's the fuel, the insurance, the maintenance and repairs. So next up is travel. So you can actually claim travel expenses. That would be the airfare, so your flights, the hotels or Airbnbs now, and also the meals if you are traveling for business purpose. And you have to prove that there was business purpose if you are audited or reviewed. Let's look at some examples of business purpose. So that would be, traveling to another location to see if you want to open up another store there, traveling to meet a customer or client or a prospective client, traveling to meet one of your suppliers, traveling to go for a conference where you're going to learn something on how to help you grow your business or make your business better. Now, a lot of you are probably thinking, great, I can travel all over the world and, go to a conference here, go to a conference there, and then enjoy myself. Just take a step back. The way this works is, let's say, for example, you're going on a business conference to Las Vegas. It's a 5-day conference. So you booked a flight for 7 days because you're going to be at the conference for 5 days, but then you want 2 days to yourself to gamble, to have fun or whatever, enjoy yourself. So the airfare is still going to be an expense. The hotels and meals for the 5 days you're going to be visiting the conference are an expense. But the 2 days where you're doing your personal stuff, that is not an expense. Next up, telecommunication. So a business phone line or internet for your office, if it's completely business, it's an entire write-off. But if you have a cell phone that you're using for business and for personal, you're going to need to prorate it just like we did with the office and home and the motor vehicle expenses. So how you do this is by looking at your bill, seeing what your airtime was for the month. Let's say, there was 100 minutes spent on total airtime. 60 minutes were spent on business. That gives you a ratio of 60 over 100. That's 60%. You'll be able to claim 60% of your cell phone bill each and every single month. You might have noticed I missed the larger purchases, something called capital assets. So these are things that you buy, but they have a useful life of longer than 1 year. So you buy something, but you're going to be using it for 1, 2, 3, 5, 10 years. Examples would be new computers, furniture for the office, camera equipment, specialized equipment for your industry. Although these are an expense, there are certain CRA rules called CCA, Capital Cost Allowance, which dictates how much of an expense you can take in each year. I'm not going to go into too much depth. I just want you to know that these capital assets are expenses, except the expense gets spread out over a course of time, depending on where they fall with CRA rules. There you have it. That's the list of the most common expenses businesses will have. A question that I get asked often is, well, how much can I expense? Like, can I go willy-nilly and just expense the whole thing and buy $50,000 worth of camera equipment because they're cool? Yes and no. If you have the proper documentation, you can go and expense everything as long as it has that business purpose, that business intent. Coming back to what I said originally, CRA's definition of a business expense is any expense incurred solely to earn business income. So if you can prove that, then you can expense as much as you want. But just one note. Let's say you're a realtor and you earn $1 million in commissions. After every sale, you take out, the new home buyer and their family to a nice steak dinner, costs you $2,000, which is, a drop in the bucket considering how much commission you're earning. So over the whole year, you spend $40,000 on steak dinners for your clients. If your commission is $1 million, that's totally understandable, right? It's a small percentage of what you've earned. But if you're a realtor that only earned $60,000 and you spent $30,000 on steak dinners, that's where a CRA audit or review would happen. They're going to be like, why is this ratio so high? This doesn't really make sense, right? Why is this person spending so much on this? So that's when they would kind of dig further and possibly send you a review letter and go through all your receipts and make sure everything adds up. And finally, I just want to make a note. All the expenses that I covered are very generic. They apply to most businesses. There are specific industry expenses that are, for example, a plumbing company is going to have much different expenses than, let's say, a law firm, right? So there's different expenses for different industries as well. If you're just starting out and you're wondering, hey, I don't know, is this an expense or not? Best to consult with your accountant or send me a DM, leave us a comment, and I'll get back to you. If you watch this video, well, first of all, thank you. And then second, if you have any questions or you want me to go deeper into any of these expense categories, just leave a comment. I'll make sure I make a video on that as soon as I can. See you in the next video. Thank you for watching.